I, I
Um,
was doing some quick research here on the international debt in United States. There's some interesting figures. There's the current U.S. external debt reached 28.6 trillion this year, and
yeah,
it keeps rising because it was 21.1 in the beginning of the year. So it's just some crazy numbers. Total U.S. gross federal government debt surpassed 38 million this October. It's marking a historic milestone.
like,
It's all of this money represents debt held by the public, so it's money borrowed from domestic and foreign investors.
yeah.
So essentially a ton, like crazy amount of money, right?
And so the problem is if the economy collapse, everything collapses within the US. Like it's not just the government, it's the public stuff, right? It's public
Yeah, because it's
loans
so
and
connected. The debt to GDP ratio has reached critical levels. Gross federal debt stood at approximately 124% of GDP at the end of 2024. It's essentially, again, another example of the consumption, outpacing the output, right?
yes. So this is the other thing I want to talk about is that this is the result of think about the height of the US economy was in the 90s, right? Like they were like doing the greatest at the time. That's why the 90s were so people were reminiscent of because yeah, everything was great in the States. That's been what, 35 years. But between that, because I see this from basically during Clinton's era, what he did was he allowed options trading during the 90s. Like before that, like you can't do that much options trading. Correct me if I'm wrong. I don't know about this, but I heard the fact that he has an act like a Security Exchange Act or whatever. So in the 90s, what he did was he opened up the kind of investments that Wall Street can do. Because before, the government had regulations on what they can trade and what they can't trade.
Mm-hmm.
So they can't use too much leverage back in the day. But now, because everything seems so great, the economy is great. So Clinton, like he did the act of allowing basically he signed the executive order to allow Wall Street to just open it up. Like you can do whatever you like. You can do leverage trading, options trading, yeah, basically option trading, whatever, right? Which leads to even more money generated. So at the end of the 90s, yeah, the US was like, we're doing great, right? But see, the problem is when you open that up, option trading is very risky, right? You leverage way too much. If you leverage way too much, you're done. So this leads to the 2008 financial crisis because of that legislation open up everything. Basically, Wall Street, they're like, well, the world is our lunch. We can financialize every single thing there is. So they did that
Right.
for their mortgages, right? Like the from the Big Short, the movie is a great movie, right? It's showing you what happened. It was just they were like, hey, what else can we financialize? What else can we sell and trade to make money? And they're like, oh, mortgages. Yeah, there's just so many, this is like a construction boom. So like let's do that. So they loan money to people who can't even afford to buy a house, whatever, don't care, right? They package all that stuff as like, hey, this is a financial asset. Let's sell this. And what happened was, well, eventually the grenade is gonna explode, right? And that's what happened. That was a big mistake, obviously, for the financial system for the U.S.